SBA 7A loans up to $5 million. How about up to $350,000 or $150,000 much faster? And business loan examples I'll be walking you into in a moment, showing you a questionnaire format business owners fill out, where then I will be able to evaluate, analyze, and give you a proper response back via email on your best funding option and options, thoroughly broken down like nobody else's business. Plus, 0% interest for 6 to 18 months and up to 150, if not 250,000. You'll want to stick around towards the end of this video to learn more about what that entails. What exactly is it? And how do I get 0% interest and be able to liquidate cash out of what I'm going to go into in a moment? Hi, this is Michael with Viral Funding Solutions. I'm an expert business loan broker who's been doing this for a long time. And that's just another way of saying that I'm able to collect documentation and look at them from the eyes of an underwriter. I'm able to pre-underwrite these files extensively myself before they go into proper underwriting. This way, I know who are the best underwriters and lenders and lender to show you, so I know you're getting the best outcome. And I don't overpromise and underdeliver. I do not overwhelm you. I do not cause any problems. I'm a very punctual, disciplined person, and I'm a I'm not gonna say figure, yeah, but I run multiple businesses myself. I have them in the digital marketing agency. I have them in affiliate marketing businesses. I have other ventures, but this is my main priority. And I focus heavily in helping business owners attain the right type of financing under the right strategic umbrella, partnership / roadmap for longer term results. And unlike someone else out there who, again, you're not sure who to trust, who to turn to, do they even have the best resources, lenders, underwriters capable of helping me? Do they really understand my niche and my industry? But more importantly, do they know me? Do they get to understand at least a little bit? And I'm an introvert. So for me, it's hard to trust anybody, let alone somebody thinking that they can trust me. And so I'm a very trustworthy person. Just know that I value a lot of things. I have great values and respect. And I won't be here to waste your energy and time, as I hope you don't do that as well to me. So I'll be getting into the share screen fully here in a second, where I'll be scrolling down and showing you some of these SBA 7A loan options. But what you should know is we're going to start off at the top. We're going to look at the 7A loan options, and then from there we'll go down and we'll see some of the loan examples and why you can and maybe why you can't get an SBA loan, and what perhaps are some derivatives that you can get instead of or in the meantime while we're getting approved for an SBA 7A loan. So I'm going to go back into this document, and I'll leave more information down below in the description so you can learn more about these SBA loan solutions. But I'll also have the questionnaire form down below. So make sure you fill that out. That's the main priority. People ask, how do I get in contact with you, Michael? The best way to do it is to fill out that questionnaire, because I get flooded at times. And so I can't always take a call. It's not always going to be that way, initially at least. And I'll respond back via email. And I've been like many of you, trying to search for solutions. And I know how difficult it can be when you're trying to run across one thing and then another. There are formidable obstacles that are in the way. And I wish I would have had somebody like yours truly right now who can help you navigate you in the right direction without doing something that doesn't work, or they're going to show you the right direction. And so I've learned my lessons. I've gone through my pitfalls in running my own businesses, and it isn't easy, and I was a 9-to-5 employee like a lot of you are or were. But let's move into this, and we might hear about that towards the end. So one option we have, and I didn't put the full list of the actual name of the lender for strategic purposes in this video. And by the way, you shouldn't even, when you see a name, it's not appropriate to just go and apply directly that way, especially if you see an SBA preferred lender on the SBA.gov site. It's not my preferred method of making sure that you get the right SBA loan lender, because they might not understand your niche. What underwriters, what credit committee, how flexible is it? What am I actually going to be getting? Will they be actually looking at the collateral more than just cash flow, or do they require the two? Others don't always require you to full service collateral. They'll look at it and entice it, but they won't necessarily have to take it. If you have strong enough cash flow, that is what the SBA lenders like to see, a majority of them. Cash flow, liquidity, equitable collateral, and a few other formats, but collateral is one of the last things that they look at. And so you have to be careful about just going to the SBA.gov site, just finding what you find, and then saying, I'm going to get one or two of these, and then I'm going to apply, or the one that I find. It isn't that straightforward, guys, contrary to popular belief. You want to work with the consultants, an expert, and an expert business loan broker. So let's go back into this. And there are many more reasons, but we can probably touch upon that later. Let's get through this. So the SBA option with this solution here, and I'll show you more about who they are as well when you fill out that questionnaire. And if you have, I will get back to you. And if you have, and I have, you should know that, at least by now. You probably get a lot of emails, and perhaps I followed up with you a couple times where I've yet to, but make sure you look for that email when I send it back to you. It'll look like this, somewhat formatted, but it's more personalized and customized for you to find out what is best. So the SBA loan option with this one, best for the SBA, for non-startups, and I might say for your niche and for how fast you need the funds and so forth. And you have 2 years of recent profitability is best. And if you don't have that, we may take a look at it. As long as you have stronger cash flow and you have stronger history in your tax returns, that suffice. So cash flow is the name of the game when you're getting an SBA loan. It is not based strictly upon revenue. So we're not looking at, hey, well, you're generating an annual gross revenue of $1,400,000. We're looking at the cash flow of your business during periodic times, events, during the whole year, on how much money you kept versus how much money went out, how much money you were able to retain and use over and over, what was left over, and so much more that goes into our cash flow analysis, the cash flow statements, the balance sheets. We look at these things and we determine, myself with my team, your debt service coverage ratio. So if you don't have enough cash flow to support the debt that you'll be taking on, it doesn't make sense to get approved for. And we have to look at it per case basis, but profitability is most important as well. Profitability and cash flow, at least 2 years is best, most recent. Sometimes if it isn't 2 years, we may be able to look at it depending on the current calendar year too, how much money is retained, how much of this is that. But I would say shoot for at least 2 years of profitability. Business credit is established, a huge talking point right here. I'm not going to get into it deep, but FICO SBSS scores, we have to look at a combination of personal and business credit. So if you do not have an optimized credit profile as it is, getting an SBA loan will prove most difficult. And I won't go into the business credit side, but if you need to establish, you need to build any of that, look down below in the description in time, not right now as we're streaming live on the YouTube channel. I will have it there on the replay. By the way, let me know, guys, where are you tuning in from? How's your day going? How's your Monday? Mine, it's been quite busy. I've been flooded with having to work with some lenders today, getting some underwriting back from certain underwriters, and then relaying some of that information over and feedback to my clients. What I most importantly value, along with all my values, guys, is feedback. Feedback, patience, and having an open mind. Too many times it occurs where maybe you or someone else will submit my questionnaire form down below. I'm not here to waste my energy and time. If you know, once you see that questionnaire, you submit it, maybe there's a video on the thank you page. It'll show you my processes and my breakdown and what I do. I may show you a quick example of these emails that I send back to clients, and you're seeing some of it right now that will be appropriated in that email. So please do not be that individual. You submitted something, you might be already applying to 10 different places, or you're getting bombarded. I'm not like them. Truly, I'm not. I always said, if I'm going to walk away from this industry, it wouldn't be because of the money. Do you know what it would be for? The people. And what I mean by that isn't saying that you're a bad person. I'm not saying that I don't value you. That's not what I'm saying. What I'm saying is a lot of people, they are not responsive. A lot of people are not punctual themselves. They are not disciplined. And I said this, and I spoke about it when family would ask me, you know, how are the people you work with? And it's like, well, not my internal team per se, but more necessarily the business owners. So what happens is I'm a very punctual and disciplined person. So I do my stuff correctly. I'm an academic. I went to school. I value hard work, ethics, the right attitude. And so when somebody says they're going to do something and they don't do it, we were brought up, hey, your word is your bond. I don't care what ethnicity, what background you have, your word is your bond. And if you cannot stick to what you say, rather don't say, just do it. That's who I am. I'm a person who does. I don't speak about it. I just do it. I don't spew. I done. Before the person expects it, it's done. And so what I would love and appreciate from each and every one of you is to just reciprocate, putting yourself in my shoes as I do with you guys every single day. I literally do, to the point where it almost becomes very exhausting. And I ask myself, is it worth it? Sometimes for certain people, for others, it isn't. That's not brutality. That's just not aggression. That's not negativity. That's just the truth, some tough love. And so please be respectful of that energy and time. If you want to work with an expert and you want to work with the best, just know I'm not here to have my energy and time zapped, period. And if you just want to go to somebody who will be like, whatever, and not disciplined and not going to give you all the information that you were requesting in a very timely order and a good manner, the right ethics, then you can do that all day long if you want. You might not get the best terms, rates, but more importantly, the person. It's not about why as in the business, but why as in this person. And there's more of my story I'm going to leave down below in the description. So that's what I said. And it would be something that I would consider an exit, because a lot of people, again, there's high quality, there's low quality, there's high quality. Even the ones who have like the best credit, all this, they submit things and then never to be heard from again. It is very disrespectful. It's very unaccountable. So I just wanted to put that out there. Let's go back to the topic at hand. And if you're new to this, you're like, ooh, this guy's just, no, this is the truth. And if you weren't hearing it from me, I'm not going to say at some point, but I will say that now you have that realization that I hope makes sense. So now let's go back into this and we'll go over some of the options and some of the examples here in a second. So that's what we want to see business credit establish. An ideal gross revenue of 120 can work. 150,000 is preferred. But with certain services where you're getting between 200 to about 5 million, you want to be generating closer to 400 to 500,000 in annual gross revenue and above. And even for certain requirements, they're now even becoming more restrictive, and they might request you to be doing 600 to 700,000 and above. But certain SBA loans, there's microloans, express loans, where you could be doing at a minimum of 150,000 for a microloan. For an SBA Express loan, they might request that you're doing at least 200 to 250,000 in annual gross revenue. And I'll go into some of that in a moment. So those are just some of the things. Also, they usually require a 10% down payment of the total amount you are borrowing, project costs, overall total transaction costs included. Sometimes I've seen that even waived down or completely down to like 5% and a higher guarantee, but it's not always the thing. For startups or franchise startups, you have to have less than 12 months as preferred. Usually when you look at a startup, it's anything underneath 2 years. But a lot of lenders, they like to see anything underneath 12 months is preferred for SBA. Even others would look at it and say under 2 years is fine. And if you have anything underneath 2 years, they will want to base it off of projections, or they're going to look at a business plan. They're going to ask of you to submit a business plan, and I'll have more information on that down below and how you can get that. But documents and information needed are below and how I'll ask for them. Keep scrolling down until you see the first blue hyperlink. Keep reading this part first, though. But you'll need an equity injection for a startup of at least 25 to 30%. And it, in some cases, can be at lowest 10%. But in this market, you see anywhere between 25 to 30%. And I just said here, it looks different here because it's not in an email, but it might look different to you, like I said before in the introduction. So you might hear that before when I submit your questionnaire. So experience level also matters. So the equity injection and an experience matters greatly. The 4 criteria is pretty much collateral, the down payments, you have the credit, the cash flow, but collateral, like I said, it is the main requirement in all cases. I've seen 10%, but it's not always given. Having relevant experience, operating another business that's similar or not exactly, but in day-to-day operations, management of the business, managing the cash flow, etc., helps. The credit requirements are generally high, though. You see normally like 675 per case basis, though. There have been some that have been with like a 660 or so. Let's just speed through this really quickly, guys. And I'm going to try to leave this down below. And if it isn't there, I will have the questionnaire for you guys to fill out. That way, it's not just shown as borrowed money. I go into some of those things there for SBA. And I'll have an SBA startup video, I believe, down below if necessary. Just some of the things I go into. We're going to speed through these. The loan size, 675 preferred, sometimes 660. They usually see 680. You can use it for several purposes. Preferred minimal global debt service coverage ratio, or DSCR, 1.15 to 1.25. Projected base revenue considered. And then prime rates right now, you see 7.75 plus about 2 to 3% in this industry for anything like 200 to 5 million in a lot of cases. Sometimes if it's an express loan or a micro loan, you might see it up to about 3 or 3.75%. So it becomes a little bit more pricey. You're seeing it into the early teens, 11 to 12% more so a lot of those lower amounts. Fully amortized loans from 10 to 25 years. 25 years included with real estate. If you looked at it and the transaction made sense. When available, additional real estate collateral, primary or secondary residence, investment property, etc., may be required to pledge. Alternative financing options offered through our different marketplace if that's something you want to consider, and this wouldn't work. But it just depends. Loan proceeds can be used for most eligible business purposes: purchase, refinance, construct real estate, working capital, debt consolidation, equipment, business acquisition, startup. And I mean, nothing that's passive investments like home builders looking to sell a property or rent and then sell, or however they see fit. So more so for like commercial real estate, 51% owner occupied, and a few more things. So commercial real estate is a luxury. It's something that if you would like to participate in, it's something that I can look at. I know a lot of people, they do things with like gas stations and a variety of other projects. Public records, we're just going to go through this quick. No bankruptcies up to no recent 30-day late payments. You can see everything in between. For your cash flow, what's important there: tax returns, the SBA criteria, no felonies, no delinquencies. Time in business must be above 2 years. It usually takes 3 years a person on business tax returns to close. You can have 2 years at most, but to close, realistically, we want to have those full 3 years. Owners must be U.S. citizens or lawful permanent residents. Your business must be located in the U.S. So we're going to speed through this quickly. Business plan help if you're a startup. Sometimes they may ask for it if you're not. Example scenarios, I run it through here, some numbers, what it could look like on a 200,000 minimum, but there's more to be added over 10 years at prime rate plus 2.7 at 10.5%. And then you see the minimum monthly payment there of $2,697.70 or so, principal plus interest, but it can vary on other factors. Total financing cost on that 200,000, maybe 323,844 over the term of 10 years. And so, yeah, it is more. So think about it. You may be paying 323,000, and that's more than, let's say, if you were to get an advance or a term loan where, let's say, you were going to get 200,000, you're paying back 237,000, payback over 12 to 24 months is what you see a lot of times. So yeah, it may be less. You do get a medium to higher rates, but think about it. Do you want a higher total cost of financing, and did you really need all that time? A lot of people underestimate and they want the SBA loan because it's more attractive in terms and lower interest, which I don't blame you, but you got to understand your position. Does it make sense? One, do you want to supply all the documentation? And two, do you really qualify? Do you meet what you need, and do you need the money much faster? You need something else of a different solution. So I'll go into that in a moment. This isn't set in stone. You still have to go through it. It's still estimates. Application, you can start there. And documentation, what would be asked for, you can see quite a bit there. So if you're not ready to submit all this, please back up from it, because if you're not ready, I'm telling you, I'm not going to be the guy there in my team. I put my reputation on the line, and then you came in, you only put half of it in, and then you're like, well, I got to supply more documentation. It's an SBA loan. Did you expect it to be lower doc? No. Even after the initial amount we asked for, and there's a readjustment, after the initial review, we say, yes, okay, now we need more of this. And then after that, there's another 3-day review, and then we got to look at a few more things. So you have to be on top of your toes. If you're not doing it, then it's like, why does it make sense if you're just going to not do it? So once you're committed, commit. Don't commit half glass full. Nobody should be doing that. And video reviews, I've created a video review, stuff like that. There's another one that may be achievable with a non-banking SBA loan lender. And this is where it isn't necessarily, it's not as regulated. It is as close to the laws and rules, of course. So we're not doing anything outside of that. What it is, it's better because you're not having to transfer or put all your depositing into a different bank a lot of the times. And you get a lot more flexibility, underwriting. It could be much faster, streamlined. Your niche is more understood. They can look at your niche better than an actual bank would and consider yours. And so there's a lot more to this equation, but I've seen this one work as well. But the top one I would begin with, this is another one that you can add. And this one, you know, you could do an SBA Express loan up to 350 or up to 250,000 in some cases, from as low as 25,000 to that amount. But it could take about the same amount of time, 45 to 65 days. So it might not be as the right solution that you're looking for. So I'm just going to speed pass through this one because we've already gone through some SBA. So somewhat similar, just different ways of applying perhaps and ways of opening things up. Another one, Bolt SBA loan, may be one to check out, where this one we could do about up to 150,000 from 25 to 150K with 7 days of funding a lot of times. And these can be up to 10 years with prime rates plus 3.75%. So now we're going away from the 2.75% in the standard 200,000 to 5 million SBA loan. And sometimes those are 350 to 5 million more so. But if you're only looking for something up to 250,000 within 7 days of funding, mostly 7 to 14 days in times, but we can do this one much faster as opposed to 45 to 65 days, 4 to 8 weeks out. But the rates will be higher. Just know it won't be any 10 to 11%. In a lot of cases, it could be higher than that. And so you could get it much faster, and I'll go into some of these details. It's best used for working capital. But keep in mind, too, you want to have the business credit established. This isn't necessarily one that I would focus on for startups. It's not that. So making sure that profitability is important. I would say the last 2 years, but it's not always a requirement. You have to have, I would look at it as having better cash flow, although cash flow is just one part of the equation and it's not the overall part of the agenda. So it's best for a quick amount. There are different customizable SBA solutions with X, which I put as an X for the company, and the Y partnership, where you're going to get an in-house approach from us and a team of experts and I and my team. And the ideal borrowers who have good personal and business credit scores, liquid credit like 155 or 165, sometimes 145 though. It could go less though, depending on personal credit and stuff like that. Details, we just went over. Working capital, loan amounts, funding time within days, prepayment term, 10 years, no prepayment penalty. The interest rates, Wall Street prime rate, 7.75% plus 3.75%. You can also use these for buying inventory, refinancing debt, gaining working capital, get cash receivables that hasn't been paid yet, buy small equipment. You need cash but don't want to pay higher interest rate factor rates unless you really needed to. Requirements, it does require you to have a 700 personal credit in 2 years' time in business. Over here, no down payment and no collateral is needed. So that's a good adjustment in case you didn't have a down payment and you have no collateral. Somewhat similar to the ones we saw before. They won't always need to take collateral, but they may put an emphasis on putting a lien, second, third, or whatever position on a home or on a different property, whatever real estate, but it's not always the requirement. 150,000 in annual gross revenue is what you should be shooting for to get something like this. And it may have changed in some time, but 150,000. But this is a quicker solution. And I would say making sure that no matter what, when it's an SBA loan, even though I said some of the other things weren't as important, but you want to have enough cash flow too. That's most important when we look at a lot of SBA loans. So you got to see some of them here. Let me transfer over to a different tab so I can open up this new window. 1 second. So right here, this may look familiar. I've done some of this before, but I made some new additions just recently today. So 100,000 to 30,000 business loan offers and a 13,000 plus free stuff down below that I may go into or not. Again, this was something that I did some time ago, but I recently updated it with a few things. So some pointers I want to make to you guys who are here watching right now, and let me move this over. In this document, you are going to see when people submit my questionnaire, how I look at it from the lens of an expert business loan broker. And I don't fool around. I'm not here to waste energy and time, guys. And if you can reciprocate that, if you can be understanding of who I am as well as a person, not just a business owner, not just he's the broker. I'm not trying to sell you. I'm trying to help you and aid you with the value that I'm providing you here. I don't sell. I don't hard close people. I'm not doing this tripping in people's ears and until they're just very buttered up on the grill. I'm not doing that. And so back to this document. End of month offers. So just recently today, I've had to shut down a few people's files. The lender came to me, my team came to me, and they said, Michael, we're going to have to shut down their offer. They were unresponsive. And so what I say to that is, your word is your bond. I've had people telling me, hey, Michael, I want this offer. I'm going to make a decision, or I want to move forward, or they haven't said it completely, but it's like, hey, I wanted to do this. Your word is your bond. Doesn't show. And that shows me who a person is. Like, it really does, guys. And I don't mean to be bashful on people. I worked on myself. I'm not Mr. Perfect, but I have worked so hard on myself as a person in personal development. I'm in masterminds. I've built this. This is my biggest asset. I don't care what kind of real estate you have. I don't care what kind of equitable collateral, inventory. I could care less. What I care about is this. This is your strongest asset. And so if you can safeguard and protect this and work on it every day, I'm not saying that one day you're this way and then the next day you're back to that. Working on yourself as a business owner makes the biggest difference. I see it with myself as an entrepreneur. I see it with the entrepreneurs and just the business owner. I could see that spectrum being completely on two different sides. The entrepreneur is the one that's consistently working on who they are, and they know their values, their beliefs, their core values, their focus, their mission statements, not their business statements, but for themselves. And that's also a dictation of their brand image, their personal and brand image. And so I've seen this all across the board. And I know when people are lying. I know when people, and you sometimes have to fish it out a little bit, but who's got time for that, right? I speak slower because I'm more methodical. I'm very strategic in the way I think and compartmentalize. And so when that is the case, people look at it differently and they go, this guy, why is he talking slower? It's because that's who I am. And it's because I've learned, not through just the business, but learn how to associate myself outside of it, because that's a self-reflection of who I am in my business. And like I said in the beginning of this, if I were to leave this industry, I know what the reasoning would be. It would be because of that other person on the other side. And it's because they're not transparent. They're not like doing what they should be doing. They do something and then they leave it. I get it. I have multiple businesses. I could be doing something else right now. But I made a decision and I put it on my calendar that I would do this for an allotted amount of time. So now let's keep going with this, and then we'll close up here in a moment. So if you're serious, end of month offers, follow through. Don't be that person who gets, oh God. No, that was supposed to be something that you did in the beginning, but you didn't. And so when you see something, you could probably negotiate the offer. If there's wiggle room, if there isn't, then this is where we have to begin. You establish the relationship, and then you can grab more over time. You can accept an offer at any time today. After today, they will require another month's bank statements or a month-to-date bank transaction report. I've had it in this month where people had a couple of days over in March, and we were okay with it. We were okay, but now we had to decline files, or we had to say, hey, you took forever. Like, what's the deal? And so my lender's coming back to me like, going, Michael, are they serious? And we sometimes converse, and I bring it up to them. I'm like, these people, like, their characteristics, their traits, let them get in the way. Like, I'm not saying they're bad people. That's not what I'm saying. It's that their character, their traits get in the way, and it influences their decisions to do things. And so when you're not thinking clearly, or you haven't built that up yet where, hey, I have to respect somebody else, I'm just going to quickly give them a response back. I don't have to be the one chasing people, and I won't do that. So battling for the right offer when you have the right expectations. What does that mean, and does it even exist? So again, you have to start somewhere and then move up. If you don't, you're going to continue to quickly chase something, or you're going to have to build your business credit, personal credit. Have you done that yet? Maybe, maybe not. The person you won't qualify for, let's see here. Okay, so this one here, I just mentioned how somebody was looking for a different option, but they were already over leveraged with existing cash advances or merchant cash advances, or a hybrid or a term loan. That's what you see a lot of these days. Over leveraged with low credit. We could try to reduce his payment by doing a debt restructuring. We can do some other things, but it's much harder to. And then some people who are looking for equipment loans with bad credit, what kind of expectations did you have when you were getting higher rates and lower terms and a higher down payment? Like, your credit wasn't going to be the problem. It has to be. So let's look at this here. So this is an example. Right here, you see that I've removed the name, the email, the phone number. I made adjustments to each one of these areas. If so, some of them may be the same. But I have disguised this so I don't reveal the name of the people in these, okay? So it's protected. So here I put, and this is the questionnaire. Again, you're going to see down below. Your name, and then I removed that. Your email removed. Your phone number, mobile preferred removed. Funding amount that they are requesting is $250,000, variable, $1,000. Time in business, years, or is it months? Don't just give me this. I have a lot of people who just do this. Like, what is that? I don't even know what that even means. Like, is that 12 days or 12 months or 12 years, 12 weeks? And so 12Y, okay. 12M, okay. 12 months, 1 day, okay, cool. 12 months, okay, perfect. Let's just put 10, 12 years here. All right. This way, I don't have to go searching all over the web to find out, but you listed your business name, which is fine. I give people love too. I'll try to show up on your Facebook page if I can. If not now, probably later. But what happens is I go looking for more information, which is fine. I want to learn more about your business, but at the same time, I shouldn't be having to search in 10 different locations for your business time. Like, well, that's ridiculous, isn't it? Like, you guys got to work with me and making sure that I have what I need because I'm pre-underwriting these files. People who didn't even submit this part, like credit. What is a credit? It's like that. I'm not a credit, what do you call it? A creditor. I'm not going to use your credit against you, but just give me a credit score. FICO, Experian, credit. All right, we got a 680, Michael. Even better, oh man, they put 650 Equifax, 607. Man, that person went over. Great. With 680 credit, got it. Business credit. And this makes a difference, guys. Like, you guys don't understand how much of a difference when I'm pre-underwriting a file. Like 670 to 700 is a huge difference. 600 to 680, whatever the score is, that's going to help me understand what level or what service, what terms, what rates. If you guys aren't being accurate with this stuff and you're just applying anywhere and everywhere, you're going to find out for yourself if you haven't. Business credit, yes or no? This person put yes, right? Great. Now it depends on how much. We can investigate that deeper. Ownership percentage. They say they have 100%. It can be 25 split, 55% split. You're the majority owner, etc. Lowest, but we're going to look at the lowest monthly, the lowest credit score out of the two or however many business owners if it's equally distributed. You're not the majority owner a lot of the times. That's how we do it. But you see it here, 100%. We just needed one. If this was 50%, 50-50, I'd ask them to list their lowest credit score out of 2 or 3 or however many business owners. And if it's not a 680, it's a 606, a 610. Like, that's not going to look good. Like, that already is like a reason to not approve for an SBA loan because we're looking at those. Lowest monthly revenue, $210,000. Current monthly revenue, $203,000. Average monthly revenue, $250,000. The average daily bank balance here, $20,000. Annual gross revenue at $1,300,000. Highest monthly sales in the last 6 months, $260K. Average monthly sales in the last 6 months, $170K. What is their use of funds for? They drop down here. They put expansion. We'll say that. Do they have an existing business loan? No, they do not. Great. And then if they did, they would have to list that. And if it's idle, they don't have to, or PPP. I think I'm going to add that part. But if it's an existing amount, please let me know. Is it 50,000? I have 4,000 remaining. That's better than saying I got 50. What does it mean? 50,000. Okay, when did you get the 50,000? Like, I can run the numbers myself. If you had it last month and you're getting this, but let me know what amount total, what's the actual remaining balance on that. You can even get into the terms and the rates. That's going to help me so we can get you better, if not more. Or we can work out. You can even list the name of the lenders. If you don't want to be that open, that's fine with you, but it helps a lot. So we're not going to the wrong source. Term length expectation, they wanted 10 years. When do they need the funds? This month, and they need it fast. They can just put this month. Business industry, manufacturing. Business name, we removed it. Field, purchase new equipment, payroll, and to have new buildings, or it could be anything. So with these details in mind, would I think about getting them an SBA loan? That's the number one question. Could this person get an SBA loan? Yes and no. So we have to uncover more of their cash flow, their historical tax returns. We'll say it that way. Profit, cash flow, differences there. But, we want to see if they will sufficiently be able to pay back the loan. And you can get multiple SBA 7A loans. I've seen it in cases where after about 6 months, it's kind of like a line of credit increase after 6 or so months. But with these, you can do somewhat similar. It just varies per case. I've seen that happen where you can have multiple SBA loans. I've had people do that through me a lot. But With that said, with the details that I just showed you on that questionnaire, would they be able to get approved for an SBA? I know the answer to this, and I've worked on a similar file like this and many others. Well, we got to look at it more because it's not based on revenue. It's based on the cash flow of the business. And so with all of that, the 680 credit, yes, it's a good entrance point, but it might be due to higher balances and higher utilization ratio that we need to bring down under 30, under 35, under 20% in a lot of these cases. And so that may be the biggest difference from going from 670 to 700 in credit, or it could be some other form of not having stronger credit payments, stronger credit history. And so maybe you do have a late payment, but it's not as much as the case at that point. Maybe there's some timeshare issues. Maybe you do have some subprime credit where it's less than 680, it's 650. You have something wrong or derogatory, maybe something on your business credit report. Maybe it's an industry specific thing or it's a location thing. And there's a little bit more that goes into that. So there are some discrepancies. And so without getting too deep, I'm going to send that email to that individual or individuals, and you will be able to see that if it's you. And I may show you still this option, but you won't qualify. Just know that. Unlike anybody else, I'm going to show you what you can and cannot qualify for. I don't want to have anybody questioning, well, I should get the SBA loan and this guy doesn't know his stuff. Which I had a person the other day. If you can't dish it out, don't say anything. So certain people were, or one of them, like I would say, I wouldn't say their name. I'm going to attack the behavior here, though. It's not laughable, but it's very disturbing. So somebody responded back to one of my emails. Well, one second. Bipolar weather here in Washington. One person responded back. I saw it in my email. I think it was over the weekend. Yeah. They said, hey, it doesn't look like you know what you're doing. Like it didn't upset me. I was just like, okay. Like it didn't even affect me. Like I was just looking at it like, okay. So I needed to correct them. They didn't want to hear back from me, but don't say something dumb and expect no response back. Usually I just avoid those because it's not worth my energy and time. Usually people don't respond back like that to me. It's like once in every 2 to 3 years. And it just happened to be one of them. And so they were responding back to something about 0%, this and that. I remember, but I'm not going to get into it. It's a waste of energy and time to focus on anyways. But I told them, you likely misinterpreted and misunderstood what I said. And you put it in your own words. That's what they did. They misinterpreted and misunderstood. But some of us are just, maybe we're just so stressed out in our business, or we're just worried about so many things, or maybe it isn't that. Maybe we're just characteristically arrogant, stubborn. We have an ego. We have to win. Look, I'm competitive. I was a Division I soccer player. Basically played at like the highest level you can play at. And so I'm not here for any of that. And so while I shouldn't have responded, I know that, but I needed to correct them. They needed to hear it from me and go, because that's something that they can go and share with someone else. So if they didn't hear back from me appropriately, I just told them, you probably misinterpreted, misunderstood, respectfully so, without me saying that part. But they get all like, oh, you know, like that shows me a lot of who you are as a person. So let's go back into this really quickly and glance over, because we just spoke about a few things, and we'll say, hey, does this person likely get approved for an SBA loan? Until I know more about their cash flow and everything, right now, with what is mentioned here, I can say, yeah, they have a higher chance of getting approved. Now, profitability, cash flow, those are two other things that I'm going to put in that email, and you can look at it and decide, yeah, I can. So I'm going to submit the application. I'm going to give you the documentation back. We're ready to rock and roll, Michael. Let's go ahead and do that, and let's get moving. So from what it looks like, yes, it looks like they can. It's better to say here 200, let's put it that way. But it looks much better with the numbers, the approximations, perhaps here and there. What are they using the funds for? Most importantly as well, the industry. Yeah, it looks like they could afford perhaps to do an SBA loan. Now, is that the only option they should take? Probably not. So here's where we get creative, and I'm going to try to close up here. I know we're way beyond. It is a live too, so it's expected to go about 40 to 45 or more minutes. But what I told this specific person and what I would tell any other person with a file that looks something like this, it's, well, you needed the money this month. Well, an SBA loan, you could probably try to do it in 7 days with an express or a microloan, but you don't have the credit, or it's not going to work well enough. And then you're going to be requesting bridge funding. So why don't we at first get you in to bridge funding? We get you approved for a term loan. This would be a situation where this client may qualify between 12 to 24 months. Let's say they got $200,000 for 18 months. Their rate is going to be higher because it's not above a 700. When you don't have above 700 credit and more, not just the minimum, but 725 and above, they would be able to qualify for lower rates, 1.19 to 1.3 or 19 to 30% interest. But it's not amortized like that. It's a factor rate. And so these are different products, medium to higher rates. It's based on future receivables. They're not traditional loans, not traditional APR loans like that you see at the bank, etc. So what happens is they might get a higher factor rate, maybe between 1.3 to 1.4, a little bit slightly above that. But if they're okay with saying, hey, I get 200,000, all right, how much am I paying back? Maybe I pay back 260,000, 245,000 over how many months? 18 months. Okay. So I know I'm over a year. I'm getting closer to 2 years. I can pay that off even in 8 months. I can pay it off in 6 months, Michael. People come to me all the time. Michael, I need 18 months. I need 24 months. I need 3 years, 4 or 5 years. Then they realize when they have the money, they paid it off in less than a year in a lot of cases. And they come back and get more. And they're like, Michael, I'm so thankful because I wouldn't have been open to that unless you shared it with me the way you did. And so with the situation in mind, yes, this individual may say, hey, I want 200,000, Michael. Let's go to your lender or lenders because I can pull from a pool of direct lenders. I can go to one direct lender. I can go to multiple in an in-house look. Myself with my team, I give you the best feedback. It's best to do it this way right now in this market, not that way. You're going to get declined. I have people who don't even listen to me and they still go do that. They don't get the maximum terms, rates. They probably don't even get anything. They don't get enough of what they want. They were supposed to be a different lender. That wasn't the one. But because you didn't do what you were told to do, or you didn't know that this was here, or you did, but you just were arrogant and your ego got in the way, you did it the way you thought was best. Could be, but a lot of the times it isn't. Don't take my word for it. Okay. But let's say this person gets 200,000 over 18 months at a 1.39 rate because their credit is not 700 and above. 700 and above would definitely help their case to bring it down to 1.19 to 1.3, if not a little slightly above, like in the 1.33 or so range. Okay. So this could be the circumstance. It could be higher depending on the bank statements, debt to income, if we looked at it in depth, if we looked at other credit factors that determine eligibility, although revenue is the number one factor. So if we said 200,000 over that amount of time, okay, well, we don't have to do systematically or mathematically do all that. But what happens is you get 200,000, and I could break this down differently. I'm not going to spend time on all the daily, weekly, bi-weekly, monthly stuff. But what happens is now you have the 200K to work with, but we got you 5 different approvals. Wow. The same lender is deciding to give you 5 different offers up to 200,000. See, look at this right now. So they decide you can get anything up to 200,000, but I want to give you, we're going to sequence it for you and say, hey, we can get you one at 50, one at 75, one at 100, one or 50, 100,000, 150, and then one at 200,000. How does that sound? Okay. So you say, okay, I'm getting approved for 50K in a lump sum up to 200K. I can realistically go underneath 50K if I wanted to. And so then I'd say, well, could I get a line of credit? Perhaps they can. We can try to get them a line of credit because they have stronger revenue. The credit may be something we have to look at more deeper because it's hard to get approved for those unless you have great credit. But the thing is, we'll look at it. We'll consider the two. And we can add the lump sum with the line of credit. This person here may not get over 100,000 because it's more conservative right now. And it's not like you're just going to get 10% of your annual gross revenue like a lump sum does. You get 40 to 60% of your monthly revenue, but it's going to be a lot less for these approvals. So you can even cut that in half and say, hey, we could probably do between 50K to 100K. And it's also industry specific. So let's say we got them a line of credit for 75. In this case, it's different because Lines of credit are not high approvals, excuse me. So let's say we got them 110,000, we can get them at a minimum in a lump sum. And they have to take at least 25K to 50K in a line of credit. We could try to do the two, or they'll say, hey, you can only take one. It could be the 110,000, or you only take between 25 to 50K in a line of credit. Okay, well, it's not convenient for me to do a line of credit. I needed more money. Or unless you like go, oh, well, I didn't really need that much. I could just start with a line of credit. But it's still not enough to do what you need to do. And so you go, okay, well, let's get the lump sum. How about we just do the full 175K? Can we do that? Or can we do 200K instead? All right, I'll work out some numbers here if we need to make adjustments on what it would look like. Okay, 200K. What you could even do is deposit some of that into a different business checking account and use it as a line of credit. Or if it becomes expensive, if you're paying on those accounts, I get it. But if you say, hey, I'm going to just store 50K and see it like a line of credit, even though it isn't, but pull from it. Or, hey, I got approved for this, so I'm going to take 50K, Michael. Here's what I'll do. Actually, because the SBA may be able to approve you for more than the revenue-based financing if all is in depth. So let's say we were able to approve you more than what you wanted. We were going to get you approved for $250,000. Great. With the SBA 7A, up to 10 years, amortized at 10.5% with current prime rates, plus 2.2 to 2.75%. Now, I needed an additional amount, at least of 25 to 50,000 on top of that. I readjusted my numbers. Okay, well, we could do revenue-based. Why don't we get you a lump sum? I know it's shorter term. You won't probably like the medium higher rates. I get it. I know how that works. I know all your guys' objections. I do, literally. And I won't say something ever in my benefit. It's always in your benefit, in your interest. Okay, well, another loan scenario is if we did 1-2 up to 150,000 with the right credit and everything included, how about we do 50,000 originally? You want right now fast. We can get it even faster for you. And then we can try to get you the other 125 or so, whatever you need, 100,000 there for the remaining amount, 150,000. So you got to look at it like, okay, how fast do I need the money? Can I wait 2 to 3 months? Do you want to get approved for an SBA loan? Do you want to try to go through the underwriting there after I show you what it all entails? And in the meantime, we can look at getting you bridge funding. Does that scenario sound like something you want to do? It just depends on every option. So let's go back into this and we'll close up here in just about a couple of minutes. There are more options underneath here. And here's another example, 40,000, 540 FICO, business credit, no, time in business years or months, 1 year, 4 months. Your monthly sales, 75,000 on their lowest month. The annual gross sales / revenue that they're generating there. You see some other ones. So let's quickly go through this. This one, credit obviously is an issue. Now, what they have is at least a year, 4 months. They have 75,000 on their lowest month. So based on revenue-based financing, this would be their best approach because they don't have good credit. I can't say, hey, you have a 680 or even a 650 credit or even below at a 625 or so to just try to do business credit cards, personal credit cards, even if they're not 0% interest and you can liquidate the cash out of these cards. Well, you're going to have to start somewhere. It's not a fully optimized profile. You should get to at least a 680, if not 700 and above, to then open up credit-based financing that's more creative. And so 75,000, they're going to think, well, I can't afford to pay. Well, this is your only option. Your depositing may not be as frequent where it makes sense to do this, but what other options do you have? Like, you're so limited on your options, it's much harder to. And so you don't want to bite more off than what you can chew and say, okay, I'm doing this amount. Oh man, my revenue's up. Construction, average monthly revenue is 80,000. They're looking to expand the business and increase the marketing and advertising budget with more inventory too. So I'm going to quickly speed through this, but every scenario is different and I can go through yours without even looking at the bank statements. I know this so well, but once I do look at that, I know it even better. And then here you can see what you can get approved for. Sometimes we'll get you an email that says, hey, you've been approved for the funding amount of this, this, and this. Here's a lender closing fee. Here's what they would expect. Some of the underwriting guidelines right there. More examples. I'm just going to go through this quickly. But there are so many examples here that I'm not going to spend time on all of them. Documentations needed. What would you need to submit? Business line of credit requirements, how it's much more difficult to get approved for, and a lot more. So here, let me move this over and we'll close up. Okay, so I'm going to close up the video here before hopefully 55 minutes. Hang in there with me. Thank you guys. Appreciate you. It's a marathon, not a sprint, right? We're not here to just make short gains. We can take a short temporary setback, but for a longer term gain. Sometimes we have to do that. But what you see in front of your screen is the questionnaire that may look very familiar to a lot of you. So just hang in there with me. But this is what I have created myself. And what I put together is a questionnaire you can submit, and I'll be able to evaluate it, analyze it, and give you a proper response back via email. It could look something like that. Maybe it looks different over time. Click here. So please select from one of the two options. Are you a non-startup business with 3+ months in business, or are you a startup business with less than 3 months in business? Plus, I will give you my personally created 6-step funding checklist, my pre-approval checklist that'll walk you through what you should know before going into an application. So right here, you can click that one if that's what applies to you. Get the funding your business needs fast. Complete the questionnaire form below to get a personalized and customized email response for your best funding option and options from a real, right here, guys, business loan broker expert. This isn't fluff. This is real stuff, and I take it very serious. Please be serious and responsive. Do not be that person wasting my energy and time. Not to be redundant. No energy and time wasted. No fluff, no theory, no what ifs. I'm going to show you. By the time you get this email in return, people are like, well, some people are, and this happened to be on the weekend to the same person who responded by saying that I don't know my stuff. And I had to correct them, whether they thought I was being as professional as I could be. And the thing is, you have to sometimes correct somebody so they can get it, or else they're going to continue doing the same thing with someone else. I would want somebody to correct me. Hey, okay. I talk to my lenders all the time. Hey, did this change? Or I just wanted to have a quick question about this. Yes, Michael, it changed this way. That's how you do things. But it's not always guaranteed to be on a phone call. You don't always need to have that phone call, specifically when I have these systems the way that I have them built. And so, like I said, I just showed you a sneak preview earlier of that SBA loan option, and I might be able to do it here again. 1 second. Here it is. Let me open this. I'll show you guys this really quickly. So this is the questionnaire that it'll look something like this when you get it back in return. Hi, your name, it's Michael, and then my position. I hope you're doing well. Thanks for submitting your details for expansion funding on my website. I'll remind you of it to take care of your in the industry business. I've carefully reviewed your information and it looks good. And I'll show you your best options below. But first, how are you doing? I appreciate, or how's business going? I might put something else there too. I appreciate what you said in the describe your request field or additional notes field about da 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 da. So, and then I might say, just so you know, or so getting you 170,000 would be difficult initially because of this and that, right? But we can look at creative credit-based financing where it isn't unsecured, or it's still unsecured, like no collateral, and it's more likely going to be in the form of personal installment loans. Term loans is otherwise known as personal lines of credit and or credit cards on the personal and or business side. So while that debt may show on your credit when you're taking personal loans and those kind of ways, well, is it your only option? Is it what's best, attractive? Can you get more? Is it affordable to get more? So with unsecured business financing options, not all of it, like the term loans, the hybrid cash out advances, will those be reporting to your personal or business credit bureaus? And it has an advantage to a degree if you don't want that to be showing and reflecting and hurting your credit, which helps out a lot in a lot of cases, specifically when the debt's showing up on your credit, then you're liable for all that, and then you can go bankrupt. But you have to be strategic. Not everybody's that's not gonna happen to everybody. It's just the people who don't understand how to use the money, or they just wanted something temporary and they find out they can't make the repayments for the rest of it, or don't pay it off as fast as possible. By the way, this email will be sent in 2 different locations, both the same, but I sent it twice so you don't miss it. So I'm going to show you the services lenders with the respective applications in this order. From the best options at the top, starting with getting fast advance funding due to credit industry, this might be best, to equipment financing, credit-based financing, etc. I'm going to give you guys a sneak peek of, well, I wanted this. No, you can't get that. And I'm going to show you even more down below, but no, you cannot get that. It won't work that way. So note one, this email will be clipped. And because it is rather long, so if it is, please click to view the message email at the very bottom. Also, each option will be separated by green headings. The first one is the best, so start there. Note two, read through it carefully. And then we're going to go, hey, here's the option, here's the service, documentation required, here's some ballpark numbers, here's the application, here's what it takes to a qualifier. The link provided, there might be a fintech company, that's how we request things. And there's probably another option that goes, here's a personal startup loan, the SBA loan. So at the end, I'll have a conclusion and a roadmap underneath that conclusion and some extra bonus stuff, some cool stuff. Perhaps it's still there, but you're going to get everything you need. So now let me move this back to where we were. We'll close up. So here again, you're going to select, or you're going to add these fields. It could literally take you less than a minute. I know it might not look like that, but literally you can. You can give me some rough estimates and you can run through this, but don't just do this. Like, I auto-populated an email, but you sent me an email back and I never received it. And God, we got to really do that. Just, hey, I put this email in. This is the one that I want you responding back to. Done, said, done, complete. And then the phone number right there. You can put your mobile number, preferred, because what I will do once you guys submit the questionnaire is I will evaluate, analyze. I will go through it in very, very detail. I even tell you in the email, I carefully, with my strategic cerebral mind, took the time to look through everything that I could have at that time to pre-underwrite your file. Now, when I'm done, I'm going to send you guys an email or a text, excuse me, of course an email, but a text that says, hey, I've sent you an email with the subject line, da, 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 da. Can you please refer to that? Reply back if needed or if possible. But you can get started right then and there. Reply back to it with any questions. You have my mobile number. Send me a quick text or my business number. It doesn't always have to be a quick phone call. If it's a phone call at that point, it's for clarity reasons. And people are so like, to this day, like, well, I get it's business and I get it's finances, but I've been doing this for so long that I have to sift through the pretenders and the action takers, people who just seek information and people who do something about it. If you had me as your client, you bet your ASS that I'm going to do it. If I feel committed to you, I'm going to do it. If I feel like you, not only just your business, but you and your business and what you know is where it needs to be, and I'm going to ask you all the tough, hard questions, because like many of you, I understand my cash flow. I understand my net profitability. I get all of this stuff. I'm looking at it at other clients, and I look at it for myself. I wouldn't just want to give this to anybody. I don't know if that can say enough, but I think I have, and I show it. I don't speak about it. I'm a very, very private, quiet person. So when I'm getting to work, you bet your ASS that I'm working. And so please make sure you fill out that field, all fields appropriately. And on the thank you page, you should be able to get an email. Sorry, client. You should be able to get an email back with everything appropriated and populated for your specific qualifications and what you can get approved for, what you can and can't get. So again, let's go back into this and we'll close up here. I know we're way past time, but there you can see all of that. I'm not going to quickly go through it. I'll leave a video down below for you guys if you guys want to view the whole video on this business loan questionnaire, how it works, somewhat of what I said. That might still be there in time or it might be changed. And then on the thank you page, there'll be more information. Okay, so that will close up everything. Let me move over here. I know there are comments or a comment. One moment. Hi, Lowrider. How are you doing? Appreciate you. Thank you for your comment, first and foremost. So I'm going to read this out loud. So I have a business I want to buy. It's $3 million and will more than pay the debt from the cash flow. That's good to hear. What is the requirements for an SBA loan? So first of all, I like the part where you said it's $3 million and will more than pay the debt for the cash flow. That's what I like to hear, because cash flow projections, where it was, because we also have to look back in time at the history of it, historical data, historical numbers, and making sure there was sufficient cash flow at that time as well, or where it was periodically. with balance sheets. I look through all of that myself and with my team. I pre-underwrite files, guys, like I'm telling you. And so what happens is, if that's the case, and if it's a profitable business, we also want to know that it's best to have a profitable business over 2 of the most recent years, 3 years and above. Of course, more helps. 1, we could still look at it. But sometimes a lot of these businesses are relatively new, and so you don't see enough profitability and historical data from those tax returns. So it's not always suitable. But with what you're saying, it sounds like it is, right? And so 2 different distinguishes, and I won't get into the profitability and cash flow and how that's all operated and et cetera. But yes, the requirements for an SBA loan, for that, I kind of more or less went into it earlier, but you do want to see at least a 10% down payment. We could do a seller note and do seller financing if the seller is willing to do that and finance more of the cost. Yet that will likely bring down your term. Instead of being 10 years amortized, it might bring it down to 7 years, if not more. Sometimes, in some cases, not always. It would be more expensive overall total transaction costs, but that's something we're willing to look at if you needed to finance it that way or find a multiple variables of, we can do. But 10% down payment, do you have equitable collateral, or does the lender, the seller, have equitable collateral? What kind of assets? That's what they're going to want to take into account. Assets and liabilities from the seller's perspective. They want to base it off of projected value in the business, not just in this market, but what will happen down the road. And also, on your point, it's your experience level. So experience level matters most. Outside of equitable collateral, the liquidity is most important as well. The down payment, but we will also want to make sure you have the experience to navigate that business. Not necessarily do you have to have had experience in that same one. It helps. Anything vertical, not horizontal. Horizontal meaning you're just shifting. If we're vertical, you are a business owner who owns a certain business in that specific space, or you don't, but you have the management experience. And so we'll likely want to see a business projection. We're going to likely see a business plan from you in showing us that, hey, this is going to be the people on my team, like a venture capitalist does. And I have my venture capitalist team of people too, just so you guys know. I know what happens in each and every one of this. Crowdfunding, equity crowdfunding, it does not matter. But the thing is, they want to know who's on your team, who's going to be doing the operations, product management, product development, who are the specialists and what they do. They want to make sure that you guys can find common ground, because if there isn't any, and the lender decides to pull back because you don't have that experience level, or you don't have somebody on your team that can demonstrate, they might have to become part owner of the business at that point. Not always, but they're going to want to see that. And 10% is very conservative. So sometimes it may vary up to about 20%. It just depends on the overall total transaction costs of the business. But I've been across every scenario where people don't qualify, they do qualify. We'd have to do creative credit-based financing where, what I recommend some people do is do a combination of installment loans, personal lines of credit, and credit cards, or do an online bank term loan transaction with the line of credit. We could do a few different scenarios though. And there's a little bit more detail when it comes to collecting documentation for startups or not startups, but they're doing a franchise acquisition or a non-franchise acquisition, What type of, maybe you don't want to reveal that, but what type of business is this in? Obviously, the more employees, the better, but it just depends. There's so much that every single industry we have to look at, and it works differently. Like one industry that gets a lot of scrutiny for getting like an SBA loan, even if it's an acquisition, it's like a temporary staffing agency. Those are harder because a lot of preferred lenders would rather see collateral, but those are heavily cash flowing businesses when you look at them. Got it. Thank you. Yeah, that's definitely one that would fall underneath SBA eligibility. I would have to see more details, obviously, but if everything like you just mentioned is there, then I see why not. I'm doing a lot of SBA loan deals. So if anybody, yourself included, would like to get in touch, and the best way to do that, if you haven't yet, is filling out that questionnaire. But I have a lot of people right now in the process of getting the SBA loan, those who have gotten it, and it's per case basis on what we would have to see, of course. But that's what I recommend, filling out the questionnaire form. And I'll show you what I showed you guys in the beginning of this video is those different SBA loan options. Not all are created equally. For certain businesses, I have to take them to like a non-banking SBA lender. This one is better preferred at an SBA bank where we can open up an account with a new banking institution, which isn't bad. And so it depends on what we're doing. And I'm going to be transparent with you guys. I'm not going to do something because I get to earn 20%. And I'm not going to do any of that. Does anybody else have any questions? And I can be here asking you a lot of questions, Lowrider, like a lot. But we're at the end of this video. We're way over time now. But does anybody have anything else they would like to bring up? Okay. So you've never owned a business. You're an investor, more or less, and you don't want to be in the business, rather grow it. Okay. Yeah, there's different ways of partnering, especially when you purchase a business. You may want somebody else. So you could be a silent partner, perhaps, with less percentage in the business. You may not want that at all. There are a lot of opportunities, though, especially in like the equity crowdfunding field. That's one that I recommend you take a hard look at. There's a lot of room there and a lot of interest growing right now in this market. Where it's moving to right now, what I'm seeing, just so you guys know, I'm going to probably end it here. But yeah, that's an opportunity. I just have to make sure everything lines up. Who's going to be owning the business? Who's going to be running the business? Those are the things we have to look at. And if you're a silent partner, you're probably going to be the financer, right? You might be that person. So it just depends. Like right now, I'm working out a lot of like real estate deals where it's not vertical, it's horizontal. And I have a person who knows a builder, who they're building it underneath them, their reputation, their entity. So it just varies. But the market right now, private hedge funds, venture capitalists, private equity crowdfunding, startups, that's the hugest difference right now that I've seen is those are the ones that are just rising quick. And I'm doing a lot more of those deals, a lot heavier deals with startups. I'm doing them with equity crowdfunding for startups, for invention type of services. There's a lot in different industries. Venture capitalists, angel investors, private hedge funds, equity crowd. I just named that equity crowdfunding, but any type of equitable collateral investments, stocks and bonds, 401k, IRA financing. Not to say that revenue-based financing isn't in the equation. I still do that every day, but I know this market. I know how many of you are struggling to just keep up with your payments. I know how many of you are having a tough time making the right deposits. I know how this goes. And so it's no surprise to me that while that industry or that space is still going strong, I know that there's a setback because of our economy and what we're trying to do to curb off inflation. People not purchasing enough. Prices are going up. Fuel costs going up. So when I see people who are hesitating on taking amount of a lump sum, it's not because they weren't able to or never able to. It's just because of the market conditions. And so they can't justify taking even just a little bit and paying back this over the next 6-7 months because something may change abruptly, like it has perhaps. And then now you're just back at square one. Maybe you can't make the payments, but that's why there's other sides. There's credit-based financing. There's collateral. I've done account receivable financing, heavy machinery equipment, inventory financing, commercial real estate and or developable land. I'm doing a lot of land deals right now. But it's just a testament of who I am. I'm not going to sit here and say I'm perfect, but I expect punctual and disciplined people. Because if you're not disciplined in your own life, it's going to show a reflection of what we do here. And it shows. It shows a lot. And like I said at the beginning of this video, I think this is where I'm going to close up now. I'm not a talker, first and foremost. I do these in video because I've learned it. I'd rather be writing and blogging, to be honest with you. That's who I am. But like I said, if I ever decided to leave this industry, it wouldn't be because of the money. It wouldn't be because, well, I'm not making this and I'm not doing that. Like, what I provide is the result. So what I provide for you is what I'm focused on. I'm not focused on the outcome of the money. I get it's a business, but I think about it different. Me and you maybe have different ways of thinking about these things, but you got to learn them. And so what happens is I won't necessarily leave it because of, well, I'm not making this and that and I'm not that. It would be because of certain people. It's too exhausting for certain people to, and I wouldn't want anybody putting up with them, let alone myself. bipolar weather. So like I said, again, if I were to leave it, it would be because too many people are just dabbling, and it's just they want my attention and then they don't, or they want it and then they went somewhere else and then they did this and they didn't listen correctly. I have people who I haven't even gone back to them. People who put in an application for something that they didn't even pay attention to. And it's just disturbing. I'm like, you guys don't even pay attention to the things that I give you. And so it tells me a lot about someone. Okay? So I didn't mean that to sound like, well, you're devaluing your content by saying things like that. No, it has to be open, right? Who's going to be open like this with you? All right, everybody. I appreciate you guys. Please look down below in the description, which I'll have up soon. Not right now, but on the replay. Check that out, the questionnaire, if you haven't. And if you have, I will get back to you appropriately. But let's be on top. Let's be on top of things. Let's not be very like, I'm going to submit something. If I came to your website and I really was interested, I wouldn't just submit it. I would submit it because I knew I wanted to hear back from you, whether that was just email or not. Hey, all right, great. Second step. But we're just in motion. Until something gets completed, you're just in motion. So please show up appropriately. I know how sporadic this industry and this space is, but I'm not like everybody else. I'm not at all. I say that very truthfully. I don't know how much more, but yeah, and I can get in my story, but I'm not going to get into that right now since we're at the end of the video. But down below, there will be more information. Appreciate you guys. Please give it a thumbs up if you found value. Share with others who you feel will find value out of this. It can be a complete stranger, a friend, or a family member. If you liked it also, please subscribe and then click on that bell notification icon, please, so you do not miss any future content I will be coming out with. That is all for now. Appreciate you all. Thank you.